In this video, we will talk about what are the most important price action rules and how to identify the directional bias of the market using pure price action. The very first rule I can see straight in front of me, and this is a trend range rule which says the buyers will buy at the bottom and sellers will sell at the top. You really want to be careful selling directly into the support and buying directly into the resistance. Now another rule that I want to follow is a trend line rule which says after break of a channel, we expect correction or reversal. We have a downtrend working lower followed by a break, new low was formed, and according to range rules, reversal happened, and right now we have a break close outside of this uptrend and we formed new extreme. Now I can see a couple of swings at the bottom and this move was quite strong. So when I'm watching this live, it's not so easy for me to pinpoint which channel is exactly the correct one, because I was also potentially eyeing a channel like this that is just slightly wider, still in play. When I'm trading a trend range like this and I'm deciding between two channels like this, with or without the break and extreme, the exponential moving average, the supportive indicator, is pivotal. If the EMA is going to hold, that's a good sign that the wider channel is confirmed. But if the EMA is going to get a break, that is a good sign that the channel has a break new extreme and I can expect reversal. And this is exactly what happened. We had lower high working lower, and this is where I'm going to redraw why the downtrend. Why the downtrend? It's because we bounced at the top of the trend range, uptrend played out, and because EMA didn't hold, we expect bearish reversal. And because I expect reversal, I'm going to draw a wider downtrend. One trader asked me, why didn't I draw trend line tight like this? I would draw a channel very tight like this if I was expecting for this downtrend to be just a correction. But I'm not expecting correction. Uptrend played out, the trend range is coming into play, and I expect straight bearish reversal. Now we have a failed second entry long here, but there's big gap between the EMA. It is still very far from EMA, so I can't take. EMA keeps rejecting once and twice. This is the lowest low, and we have first entry short, pullback, second entry short. Notice how EMA keeps rejecting every single time. I can draw smaller resistance for better visualization, and we can see it's the second entry short while the downtrend needs to get new extreme according to trendline rule. So this is the first great high probability setup, great signal bar, double top, double rejection of the EMA, and the downtrend needs new extreme. Okay, so I hope why it's clear how you can adapt looking for tighter channel to break a new high, and right now the bearish reversal. It's a great setup. Market form new extreme. I'm going to mark it. Now there's a chance we're going to go all the way down here. So you're going to observe what the EMA will do, and you can see EMA is not providing any rejection. So this means that the market just formed first leg down, second leg down. This is very typical. This is how market likes to move in pairs of twos. So right now what I have to do, remember, you never want to leave a series of candles on a chart without a channel. Even though these channels may not be strong, there are still micro channels on the chart, especially in trend range. So I'm going to redraw my tight channel. We're closing outside. We have a new high, first entry long. So what is the price action trader expecting right now? Well, I can see if the downtrend played out, so no bearish momentum. This channel is in play, so trendline rule dictate that we're going to get new extreme. So if I want to buy safely a high probability setup, I want to see a two-legged pullback, second entry long at the EMA. And we can see we have a new high, first entry long, pullback, second entry long. But this second entry long is just way too big. And the signal bar, you can see this signal bar is 3.75 points big. This is way too big of a bar. Your stop loss has to go one tick below this initial signal bar. There's a big tail at the top. So the second entry long didn't form well. Context wise, this is a great setup. We expect new high. We're at the key entry point at the EMA. Structure is bullish. This bullish channel is new high, but the signal bar didn't form that well. The only chance is a high-low confirmation setup, which never formed. Market formed new extreme. I'm pausing, looking to go long. I have a break, new high. So you can see this is how you have to play the trend range when you don't have a clear, strong channel. You have to follow the short-term channels. They will guide you and you will stay on the right side of the market. You will break new high, so I expect reversal. I'm going to redraw a short-term downtrend again. Okay, I have a new high, first entry long, second entry long failure, but the failed second entry long once again formed with a bullish bar, and more importantly, not full at the EMA. And now you have sort of like a lower high confirmation of the failed second entry long, and it's kind of like a part of the failed second entry long because the sellers who are selling here still didn't manage to get the scalp. So you can see the EMA keeps rejecting again, but because, you know, It didn't trigger about this bar. It's not the best setup. I can mark it only as more aggressive setup. If you took this up right here, it's definitely a little bit more aggressive. Downtrend needs to get new extreme. The setup worked easily for a scalp, and we formed new extreme. Now what you can observe is, I'm going to zoom back. I can see EMA is flattening, and I can see consistent price swings up and down at the top portion of this trend range. So it means most likely there is some secondary trend range at the top of the main one. I'm going to redraw the short-term uptrend, and because the price action is right now breaking above the EMA, this is confirming my bullish bias. This support is important. EMA is not holding. Okay, we're back at the support. We keep breaking higher. Now we have a new high. First entry long, pull back, second entry long. But the second entry long formed really bad. Not only it's not at the EMA, but the signal bar is bearish. You expect new high over this channel, and also because you bounce at the support, a lot of times this is the point where the brand new uptrend will start. So either way, you can redraw a brand new uptrend, because you can see you have so many matching lows, and when you have so many matching lows or highs, you can take the last one to redraw a brand new trend, because the traders will reset the count when you have many matching lows. Either way, unfortunately, we cannot take it. We're breaking the channel. We expect the same thing as here, new extreme, but we didn't get the opportunity to go long because we already created new extreme. So there are no setups right now for us to take them as a high probability setups, but it's okay. We are trading the 2000 tick chart. There's a lot of opportunities about to be formed every single day. You can see how price action rules will help you to stay on the right side of the market, follow the short-term channels, identify the overall market context, and then just closely watch how the setups will form at the EMA at the key entry point. You want those setups to form great. So right now we expect reversal. Why? Because we have triple top, we are in a trend range, you have break new high, and market will pivot at these extremes. Simple price action. We have lower high, but lower high is way too far down. I can't take it. Okay, we have a new low, first entry short, pull back, second entry short. Now this second entry short is interesting because this channel needs to get new extreme. Simple price action. We're most likely going to go all the way down to here, but the signal bar was bullish. You cannot sell below bullish bar, and if you want to wait for double bar entry, you can see how big this bar is. I'm going to use the quick ruler and I'm going to measure it. I can see it's over 4 points. So when I'm watching this live and I'm measuring it's over 4 points, that's too much risk. The setup didn't form that well. You can see the scalp was almost made if you're going to use the double bar entry. So even though you expect second entry short to create new extreme, unfortunately, this is not really enterable for us. Maybe on your chart, if you have slightly better bars, you can take it. Not on our chart. And now we have new high, first entry long, pullback, second entry long failure. But I just reached a break and a new extreme. Now there is a chance that there may be a wider downtrend like this because it is getting confirmed. But when you have a break and new extreme, it's very hard to find this channel live. There are traders who can do it, but it feels a bit more aggressive because you just had a break, new extreme. You're most likely going to reach the support here, so you have room to scalp out, but it would be better to get a confirmation with the second entry short. Market continues working lower. You can see you don't want to be fading the market because this downtrend has been established. You can see how nicely the candles are fitting inside of this wider downtrend. And why are you thinking this wider downtrend? Because notice, every single time you have a break new high or break new low, the market will pivot instantly. Here you have a break new extreme, yes, but this failed second entry worked and market continue working lower. So this tells you, okay, the wider downtrend is getting confirmed. You can see how much more gradual the market looks. So right now you're adapting to this wider downtrend. Just gonna redraw a little bit longer one, something like this. We're so far away from the EMA, I cannot sell. Okay, we have first entry short. So price action trader is expecting second entry short. Notice how we're nicely confirming the key entry point, the channel. And if you have conflicting patterns, hold on, are we going to bounce off the support or going to continue working lower? In trend ranges, you expect buy low, sell high, yes, but the trend line rule still applies. And if the trend is strong on its own inside the trend range, which this trend is strong because it started from the very top all the way to the bottom without a single push above EMA, you still want to follow the trend line rule first, okay? So even though you're at the support, you are still expecting the downtrend to play out and after break to get a new extreme. But we have only first entry short, unfortunately, we can't take it. Market continues working lower. And you can see that we have a bunch of first entries working lower like this, but you can't really take it because just because it works here now, that doesn't mean it will work next time. Same thing, you can go short here on a first entry short, you can see we've gotten stopped out. So you can never time it perfectly. You never know when it's going to pull back. This is why we wait for the two-leg pullback. You want to make your trading as easy as possible. You just want to wait simply for price action to correct to the key entry point. And if you're just going to be taking a bunch of first entries, you're going to be gambling. And trust me, in the long run, it will not work out well for you. So wait for a clear pullback. Okay, the price action is breaking the channel. So what is the price action trade expecting right now? We're expecting a new extreme to be formed. And you'll be wondering, why is the price action correcting now? Notice it's coming to test the break area. Extremely common, especially in trading ranges. You have the support. We broke lower. Most breakouts fail. It's coming to test the break area. And now if this break area, if it's going to act as a resistance and it's going to push below EMA, that's a confirmation for you that you can sell. Okay. Once this breakout area will transform from support to resistance and is going to push below EMA, that's your confirmation that sellers are going to get new extreme. Okay, we're breaking lower, so what am I expecting? Lower high confirmation setup or felt second entry long to get new extreme. I have lower high here, but notice how far down lower high formed. It's basically directly into the new low. So decent setup, but too low. Needed to form a little bit higher. It managed to work this time. Massive push to new extreme. And what are we expecting? Downtrend played out to break new extreme. We're pausing our shorts. If there's going to be a good pullback to the EMA and a good short setup, I cannot take it. Downtrend played out, and it is a trend line rule in price session. So I expect right now market to enter a brand new market cycle. Most likely trading range, possible reversal, but you would identify it quite easily because you would have massive strong uptrend or the reversing. So you can see I'm pausing, looking to go short. I'm drawing my channels wider. I expect reversal. Market keeps working higher. Okay, I can see reaction of the key level still coming into play. Now we have interesting new high, first entry long, second entry long failure. And I would mark this setup had it been better bar. We can actually use this as a double bar entry because the follow-up bar is only one tick away from the low of the first bar. So you're basically entering very close to the low. You can see the resistance is coming into play again. And it's a felt second entry long so far away from EMA. A lot of bulls must have gotten trapped. More advanced trader can already recognize what's going on. If you're a beginner trader, you want to wait for push below EMA and for lower high confirmation setup, which is here. Lower high confirmation setup, but the signal bar is bullish. We cannot sell below bullish bar and market continues working lower. So you can see, even though the signal bars today are very bad, you can see how price action works and the context still fits perfectly. The price action still works exactly as you expect. It gives you all the information you need. The key level you identified very early is coming to play, acting as a resistance, felt second entry long, lower high confirmed it, flat EMA, which means you are trading a trading range. Right now we have a bearish downtrend. What are we expecting? New extreme to be formed. First entry short. Can we get a second entry short? Great sell. And we don't have a trigger. Unfortunately, we cannot sell. We have another bearish bar, but at this point, notice the congestion. So context wise, you want to sell. You can even see it visually resembles the two-legged pullback, but it just didn't allow us to enter according to rules. Perfect price action, new extreme formed. I have a new low, first entry short, pullback, second entry short failure. So this is a felt second entry short. It is a good setup to go long. It is, because we are at the bottom of the trading range. The downtrend played out with the break new extreme, and all the late sellers are going to get trapped, and even the channel right now is getting confirmed. So this right here is a great felt second entry short, high probability setup. Market continues working higher, and because our first channel is getting so much overshoot, we already talked about it, this is quite typical. Sometimes in trading ranges, the channel may start a little bit late. You can see that your channel is just way too tiny for this entire structure. It's more likely that the channel actually started a little bit later, so I'm going to redraw it a little bit later from the secondary swing that confirmed the support. Structure is bullish. This channel is a very steep one leg working high. We have a new high, first entry long, second entry long, far from EMA. I cannot take it, but we have a nice double trap. And you can also treat it as a failed breakout out of this micro congestion, and visually it looks like a visual first leg down, second leg down. Great signal bar right at the EMA, uptrend is new extreme according to trendline rule. You have the key level coming into play, but you're okay buying because this is such a strong bullish spike from the bottom all the way to the top. Very strong spike. You're gonna get a new high. You can go long here. New extreme was formed. Perfect price action. Okay, we're breaking lower. Can we get a full second entry long? Okay, the downtrend started. We're back into trend range. We have a low high, so we expect second entry short. New low, first entry short. Can we get a second entry short? I can also see that we have geometric highs at the top, which allow me to project the possible channel. Something like this. So second entry short would be absolutely fantastic. Can we get a second entry short? We cannot. You can see 3 key entry points generated the first entry short as a high probability setup. Unfortunately, we cannot take it. Renewal, first entry short, second entry short. And now we have a lower high. We have resistance being formed. And when you're watching this live, you can see the bar is looking bullish. And at the last second, it completely reverses down. It is right off the main key entry point. Resistance is coming into play. This is a good high probability setup to sell. Great lower high. Great momentum on this bar. Actually, I'm going to make it a little bit wider because the break is so tiny. It doesn't even look like a break. You can see you can still widen it and it will basically keep the structure of the channel intact. Market is working lower. Can we get a second entry short? We have a second entry short right off the key entry point, but the signal bar is way more bullish and didn't even trigger first. The market already created attempt to new extreme, and I believe now it's too late. Yes, market created new extreme, but you don't want to be trading this late. This is the overall structure for today. First main trend range, eventually transform into a secondary trend range. Follow the trend range rules and follow the trend line rule. The trend line rule today played out perfectly. It keeps you on the right side of the market. Your goal is to wait for a high probability setup to correct the key entry point. Not that many good signal bars today, unfortunately. There were only a handful of setups, but it's sometimes how it goes. That's part of trading. I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.